So Africa grows a tenth of the world's cotton. A tenth. But here's the crazy part. It's mostly clothed by other nations. How does that even work? That's the paradox we're digging into today. This incredible story of potential that's just hidden in plain sight. All right, let's get into it.
I mean, really, let's think about this for a second. How is that even possible? You've got this continent that's a powerhouse for raw cotton, right? But then most of the clothes people wear are imported from somewhere else. It's this massive disconnect that on the surface just doesn't add up.
Well, the answer, it turns out, goes way back. We're talking about a colonial-era economic model that's still pretty much in place. It's a simple but brutal cycle. Raw materials, like all that cotton, flow out, and then expensive finished goods like t-shirts and jeans flow right back in. And that cycle, it's been crushing local industry for decades. So let's break down exactly how that works.
Okay, so what's really driving this problem today? Let's start by looking at the forces coming from outside the continent. You see, African markets are dealing with what you could only call a flood of clothes, and it's coming from two very different directions.
So you've got this two-front challenge, right? On one side, you have these brand new, super cheap clothes coming in from Asia. They just completely crowd out any local competition. But then, on the other side, you have this massive, and I mean massive, wave of secondhand clothing that just completely warps the entire market.
And you know, this isn't just some abstract economic concept. It has a real, on-the-ground identity. In Kenya, people call it mitumba. In Ghana, it's obroni wawu, which literally translates to dead white man's clothes. Just think about that for a second. And in Zambia, they call it salalula, which means to rummage through a pile. The names themselves tell a story.
And the sheer scale of this trade, it's just staggering. Globally, we're talking about a market for used clothes worth nearly $5 billion in 2024. A huge chunk of that comes from places like the US and Europe, all boxed up and shipped out, with much of it heading straight for African ports.
And look at how that breaks down. The amount of money concentrated in just a handful of countries is mind-blowing. You've got Kenya, Ghana, South Africa. I mean, just these top 5 markets, together they import over $1.2 billion worth of used clothes every single year.
So as you can probably guess, this whole issue is super controversial. Because on one hand, this trade is an absolute lifeline for millions of people. It creates informal jobs, sorting, tailoring, selling. It's a whole economy. But then you have to ask the really tough question. How can a brand new local factory ever compete with a t-shirt that basically shows up with a production cost of zero? It's a massive, massive barrier to growing any kind of local industry.
Okay, so we've talked about the external pressures. Now, let's pivot and look inward. Let's talk about the other side of this paradox, the gap between Africa's potential for production and the reality of what's actually happening. Get this. A whopping 90% of the raw cotton grown in sub-Saharan Africa is just exported. Most of it heads to Asia. Think about that. The continent is literally shipping away the raw material that could create millions of jobs right at home. And the problem just keeps going down the line. So when an African factory actually wants to make clothes, where do they get their yarn or fabric? You'd think locally, right? Nope. They have to import almost all of it. Only around 7% of their yarn and 6% of their fabric comes from within Africa. So in a lot of cases, they're literally buying back the processed version of the exact same cotton they grew and exported in the first place. It's wild.
But, and this is a really important but, it's not because it can't be done. High-capacity, world-class production is absolutely possible in Africa. We already have proof. Just look at countries like South Africa, Egypt, Morocco, and Tunisia. These guys are already industrial powerhouses, exporting billions of dollars in textiles. The know-how, the capability, it's already there.
So if the potential is there, what's the roadblock for everyone else? Well, it's a whole list of tough, systemic issues. You're talking about cripplingly high energy costs, power grids you just can't rely on, machinery that's decades out of date, and maybe the biggest one, a real lack of affordable loans for the small and medium-sized businesses that should be the backbone of this industry.
All right, so after all that, what's the way out? What's the path forward? Well, that's what we're looking at next, a potential blueprint for a real African textile renaissance.
The game changer here, the real catalyst, could be the African Continental Free Trade Area, the AFCFTA for short. This is a huge deal. It's creating the world's largest free trade zone, and that provides the perfect framework to shift the focus, to start trading within Africa instead of just exporting raw materials out. And to unlock all that potential, The strategy really has 4 key parts. First, you need to enforce smart trade rules. Second, create special zones focused on industry. Third, build supply chains that work across regions. And fourth, you have to find a way to thoughtfully manage that flood of secondhand clothes.
Okay, let's zoom in on that first one, rules of origin. I know, it sounds super technical, but the idea is actually really simple and powerful. A yarn-forward rule basically says this. For a t-shirt to be traded across African borders with no tariffs, it can't just be stitched together there. It has to be made from yarn that was spun in Africa, from fabric that was woven in Africa. Just that one rule, think about it, could suddenly make it worthwhile to invest in all those missing pieces of the puzzle, the spinning mills, the weaving factories.
And here's how that could actually look in practice. It's all about teamwork. No single country has to do the whole thing. You could have West Africa, which is great at growing cotton. Focus on that. Then East and North Africa could specialize in spinning that cotton into yarn and weaving fabric. And finally, Southern Africa, which already has a strong retail scene, could handle making and selling the final garments. It's not about one country winning. It's about creating this powerful continent-wide ecosystem.
Now, it's really important to get this next point. The goal here isn't to build a fortress and cut Africa off from the rest of the world. Not at all. It's about fighting for a fair, equitable spot in the global supply chain.
And this quote really just says it all perfectly. Decolonizing African textiles is a demand for equity in the global value chain. See? It's about so much more than just fabric and thread. It's about fundamentally changing the economic structure and finally claiming a rightful place in an industry that's built on the continent's own wealth.
So that's where we land. You've got the raw materials, the cotton. You've got the people, a young, growing workforce. And now you have a real continental plan. The question, really, isn't if Africa can do this anymore. The real question is, what happens when a whole continent finally starts to wear the wealth that it grows?